Welcome to this session on trade agreements, the WTO and regional blocs. International trade today is governed by two broad framework, the multilateral system under the World Trade Organization and the growing network of regional trade agreements. The WTO, established in 1995, provides a rule-based global framework that ensures transparency, predictability, and fairness in international trade. It deals with goods, services, and intellectual property rights and plays a critical role in dispute settlements. Alongside the WTO, we see a rapid rise of regional trade agreements such as European Union, NAFTA, ASEAN, RCEP, etc. So these arrangements go beyond WTO commitments, covering deeper integrations like common markets, free movement of capital and labor, and harmonizing policies. In this session, we will first explore the principles, functions, and agreements of the WTO, including the role in agriculture, services, and intellectual property. We will then turn to regional agreements, examining their types, features, real-world examples with a special focus on India's trade agreements. So by the end of this session, you will understand how multilateral and regional system interact, sometimes complementing, competing, and sometimes trying to get integrated with each other to shape the global trade environment and what this means for economic policy and business strategy. So let me begin with the trade agreements. What is the formal definition for this? So it means formal arrangements between countries that govern international trade in goods, services, and investments. So the major objectives of the trade agreements are: one is to reduce or eliminate trade barriers such as tariff and quotas, and also promote fair competition and predictability in trade relations. Apart from this, it also aims to support economic growth and developments. So broadly, there are three types of trade agreements. One is called multilateral. That means global agreements under the WTO framework that include GATS and TRIPS, etc. And then comes regional agreements. These are the agreements between specific group of countries, example EU, NAFTA, ASEAN, etc. Then comes bilateral agreements, that are the agreements between two countries, for example India Japan CEPA agreement. So this is purely a bilateral trade agreement. Let me now start with World Trade Organization, which was set up in 1995. So it's a multilateral organization headquartered in Geneva that regulates international trade. So prior to that, 1995, there was General Agreement on Tariff and Trade, shortly is called GATT. The GATT provided the foundation but was limited mainly to goods. So the purpose was, when the WTO was set up, until then it was GATT and it was not that binding, and it was mostly a kind of guiding principles, not a kind of binding. So the WTO was set up with the objective to facilitate smooth, predictable and free flow of trade across countries. In addition, it also aimed to provide a legal and institutional framework for implementing trade agreements and settling disputes. So the important thing that we need to remember here, that WTO is not a UN specialized agency at all. However, it cooperates with the UN agencies on trade and development issues. So let us make a distinction between GATT and WTO. So as I mentioned, GATT period was from 1947 to 1994, and it was a mainly it has been giving provisional and ad hoc arrangements, and importantly it focused mainly on trade in goods, and the dispute settlement was mainly based on consensus. That means there was weaker enforcement, there was any binding law or rules that the member countries have to follow. But when WTO was set up in 1995, that the WTO where the pay for WTO, and it became a permanent and legally binding institution. So its broader scope not only it covers goods, it also covers services and intellectual property rights. And the advantage of WTO over GATT is that it has a stronger dispute settlement mechanism. That means it's more faster, binding and enforceable. That means the member countries have to follow these rules and regulations strictly. So the key shift is that from GATT to WTO is that from a temporary framework to a permanent global trade organization, that is the World Trade Organization, WTO. So let me now list out some basic principles of WTO. One of the core principles is non-discrimination. Non-discrimination means equal treatment for all WTO members. There is no distinction based on any other factors. That means most favored nation clause for each and every one. And in addition, there is also national treatment. That means a member country of WTO, they shouldn't make a discrimination between the domestic good and imported good. That means imported goods must be treated no less favorably than domestic goods. That means the government shouldn't support make an explicit support for domestic goods over imported goods. Similarly, it shouldn't entertain any other actors in the country to support the domestic goods over imported goods. So that means let both imported goods and the domestic goods compete, and based on that let them get the market share. And then comes the transparency and rule-based trading. That means there is open negotiations and commitments. In further, there is predictability. Predictability means especially in terms of binding tariff commitments to ensure certainty for business. So that means already well written or predictable way of tariff movement, tariff changes is enlisted in the WTO. In addition, there is a competition promotion. That means to prevent unfair trade practices like dumping and subsidies. I already mentioned you, dumping means selling the product in the foreign market at a cheaper rate than at the domestic market. So that is not allowed. And then comes encouraging development. That means overall taking care of the overall economic growth, development and sustainability. That means there are special provisions for developing and least developed countries as well. Let me also list out some of the key functions of the WTO. So one is facilitate the implementation and administration of the international trade. That means administers multilateral trade agreements and then provide a legal framework for trade negotiations and dispute resolutions. Then comes the monitoring. Monitoring means here review members' trade policies through the trade policy review mechanism. That means each and every member country's trade policies will undergo a scrutiny from WTO. Then it has dispute settlement mechanism for ensuring fair rule-based settlement of trade disputes between countries. And then goes capacity building. That means especially helping developing countries build trade related infrastructure and skill sets. And finally, it promotes free and fair trade worldwide through cooperation and lobbying. And let me now also list out some of the special concerns of WTO. One of the guiding principles of WTO is to support least developed countries as well as net food importing developing countries. There are special provisions, special treatment for these kind of countries to protect their national interests. And in addition, there are non-trade issues like that, increasing attention to environment, the climate change, food security and public health. And then it has policy coherence. That means, though as I mentioned that WTO is not a UN agency, however, there is in order to ensure policy coherence, there is cooperation with IMF, World Bank and other international institutions. Apart from this, WTO also ensure technical assistance, training and advisory support for developing and transitional economies. So, what WTO doesn't require? So, in this case, I am just showing you the world map here, the WTO members and non-members, that you can see that most of them are members, most countries are members of the WTO, and there are some members and observers that in ongoing accession, some observers are there, but mostly you can see that there are almost most countries in the world are members of the WTO. So, these members are free to establish their own national trade and non-trade policy objectives. In this case, WTO won't intervene. Then it retained some import restrictions under certain circumstances. Especially to protect the domestic stakeholders, for example, farmers, small and medium industries, entrepreneurs. And at that time, WTO won't intervene in that kind of restriction when the member countries are involved. The member countries can maintain their own administrative and legal systems and also use different national trade regulation. That means no uniformity is required across member countries. And there is also flexibility. That means WTO rules aim to harmonize trade but respect national sovereignty. That means WTO won't direct each and every member country on how they need to frame, design and implement their trade policies. However, it gives the broad framework through which there should be to ensure the core principles of fair competition, free trade, removing the barriers in international trade, etc. So, let me again summarize this discussion in a nutshell. The basic structure of WTO agreements, all these the 6 main areas, the umbrella of WTO agreement, all these come under in this framework. That means the broader umbrella is there, that is the agreement establishing WTO. Then comes the basic principles. It includes guard that is on goods and guards on services and TRIPS on intellectual property, that the 3 separate domain. So, then there are other key elements are the market access commitments, that means country schedule of commitments, and also in terms of services, there is country schedules of commitment and MFN exemptions. Apart from this, there are dispute settlement mechanism, and as well as to ensure transparency, there are trade policy reviews are being conducted under the framework of WTO. Overall, WTO oversees about 30 different trade agreements which have the status of international legal texts. So, the member countries must sign and ratify all WTO agreements on accession. So, I am just listing here some of the multilateral agreements that come under the WTO. Just for example, Agreement on Agriculture, AOA. So, similarly, you can see on sanitary, textiles, technical and trade, customs valuation, anti-dumping. These are all the different multilateral agreements under the WTO framework. So, overall, the agreements under the WTO, it can be categorized into 2 broad groups. One is called multilateral agreements, that means binding on all WTO member, each and every member of the WTO members how to follow this. Of this, one is GATS, that means General Agreement on Trade in Services. And the second one is called TRIPS. You might have often heard about this term TRIPS in WTO context. That means trade related aspects of intellectual property rights. Here it provides, WTO provides global standards for patents, copyrights, trademarks and other forms of intellectual property. Then there are plurilateral agreements. These are binding only on signatory members. So, for example, agreement on trade in civil aircraft, and then agreement on government procurement, international dairy agreement, then International Bovine Meat Agreement. These are all plurilateral agreement. That means only binding only between among the signatory members who are agreeing, come in agreement on these specific aspects. Let me now list out, talk a little bit more on the one of the agreement, that is agreement on agriculture. It has mainly three pillars. The first one is domestic support, and the second one is market access, and the third one is export subsidy. So let me begin with the first one. The first one is related to the domestic support. So the domestic support means mainly the agriculture subsidies. It categorizes the support to the farmers in the form of subsidies, and WTO uses boxes that are called green, amber, and blue. So the green box, it includes subsidies that are considered non-trade distorting. That means it's not affecting the international trade adversely. These are allowed without limits as long as they are not linked to current production. For example, R&D, environmental program, extension services, as these are all not directly linked to productions. So examples include here agriculture research, as I already mentioned, research, environmental programs, or extension services. Then comes the amber box. Amber box includes subsidies that distort trade. That means trade distorting subsidies. It deals with trade distorting subsidies that affect production or prices. So this must be reduced over time. The WTO member countries, they need to reduce the trade distorting subsidies over time. So think of policies like minimum support prices, that is the MSP, or input subsidies on power and fertilizers. So as you know that these are subject to reduction commitments, and these are also, you see, if countries are giving minimum support prices, these are going to affect international trade. Then finally, the blue box. Blue box allows subsidies that are tied to production limiting programs. In other words, countries can provide support as long as it discourages farmers from producing more. That means in order to discourage some of the production, the countries can provide subsidies, and these subsidies will come under the blue box of the agreement on agriculture. Then going to the second pillar is called market access. So under the market access, member countries agree to reduce tariff on agricultural imports. That the developed countries on average, they agree to reduce tariff, average 30% tariff reduction over time, over the 5 years period, and minimum 15% per tariff line. That is the agreement or commitment made by developed countries. When it comes to developing countries, WTO gave a little bit more lenient. There is that average 24% tariff reduction over time from the existing one, and minimum 10% per tariff line over the 9 years period. And the least developed countries, for these countries were exempt from reduction. That means they can continue whatever the tariff that they have been following, but had to bind their tariff over time. This meant that they had to set a ceiling and couldn't increase them in the future. And then moving to the third pillar is the export subsidies. So here again the commitment vary from countries, the type of countries, based on their income level. So the developed countries were required to reduce the value of their export subsidies by 36%, and volume of subsidized export by 21%. That means the national governments giving subsidies to export subsidies, so that they can sell their product cheaply abroad, which would distort international trade. So in order to prevent that, the countries need to agree that they will, because most countries, they have been giving export subsidies. So over time they agree to reduce the export subsidies. So the developed countries, the export subsidy has been they are agreed to reduce this much. Similarly, the developing countries also need to cut down, reduce, shorten their export subsidies over time. This is within 5 years time they need to attain this by year 2000. In addition to this, There are several regional trade agreements. Regional trade agreement means as of 2025, nearly 361 RTAs, regional trade agreements, were in force. So, RTAs are treaties between two or more countries to facilitate trade and investment. So, their aim is to reduce tariffs, quotas and other barriers among the member countries. So, shortly how it deviates from the WTO agreement is that WTO means mainly for all member countries, but regional trade agreement is between an agreement between or among a few countries that is outside the ambit of WTO. So, RTAs can vary in scope from simple tariff reduction, maybe among the between the member countries or among the member countries, they can reduce simple tariff and they can charge tariff on the non-member countries on a uniform basis if they wish. So, that means from a simple tariff reduction to deep economic integration. So, they play a major role in shaping global trade dynamics and complement multilateral agreements under the WTO. So, the examples are RCEP between India and Japan, and then the European Union. European Union is one kind of regional trade agreement. Then NAFTA and ASEAN, these are all the regional trade agreements. So, there are different types of regional trade agreement. One is called free trade area, that means FTA. Under the FTA, members, those who are members of this kind of regional trade, they remove trade barriers among themselves. Each member maintain its own external trade policy towards non-members, but between members there is no trade barrier. Example is NAFTA and ASEAN. Then going the customs union. Customs union means it removes trade barriers among the members and then they adopt a common external tariff. Unlike the free trade area, they adopt a common external tariff and a uniform custom rules for the non-members. For example, Benelux, the agreement among Belgium, Netherlands and Luxembourg, they have a custom union. That means for the non-members, they follow a common tariff and uniform custom rules. Then we have common market. Common market means it is a features of a custom union. In addition to customs union features, plus there will be free movement of goods, services, capital and labor among the member countries. So, the early phases of European Union was a common market type of regional agreement. That means before the full economic union, full EU union was formed. Then the economic union, the classic example of economic union is European Union. So, that means there are common market plus harmonized national fiscal, monetary and social policies. And you know that for the European Union there is a common currency called euro, that actually, and in addition that means it's an economic union, they have a common currency and they also follow the fiscal and monetary policies, also they follow common policies. That means there is European Union central bank is also there. So, all the economic policies and trade policies, all these will be harmonized for the entire member countries of the economic union. In our case, this is for the European Union. So, here it often involves a common currency, as I already mentioned, euro, and a coordinate economic governance. So, example, as I already mentioned, European Union in its current form. This is an example for economic union. So, let me summarize you the differences then similarities across the different types of regional blocks. I am just listing out here free trade area, customs union, common market and economic union. So, what you can see that commonly you can see that there is free trade among members, that is uniform across all these types of regional blocks. However, there are differences across common that in terms of common external tariff, free movement of factors of production and policy harmonization, there are drastic differences across these trade blocks. Let me now a little bit touch upon India's major free trade agreements. As you are familiar with the ASEAN, India free trade agreements. So, it liberalizes tariff on over almost 90% of the traded goods. In addition, there is AFTA is there. This include Bangladesh, China, India, South Korea, Sri Lanka, Laos, and Mongolia. Then the India-Japan CEPA, it eliminates duties on approximately 90% of the bilateral trade between India and Japan, and covering textiles, pharma, tea, and petrochemicals. In addition, there is a BIMSTEC agreement. This is still under negotiation among Bangladesh, India, Myanmar, Sri Lanka, Thailand, Bhutan, and Nepal. So I have some screenshot to show these trade agreements to give you a little bit more information. So you please go through this content of this screenshot to get more insights on India's free trade agreements. And one of the resulting outcome of regional trade agreement is as a result of this regional trade, what is going to happen to the international trade? What is going to happen to the volume of international trade? This can be understood by two concepts called trade diversion and trade creation effect of regional trade bloc. So what the trade creation means, an efficient regional trade bloc produces replace costlier domestic production, and then they import cheap product from the member countries. So in this case, the trade is created. That means there is a welfare enhancing situation. In contrast, these regional trade agreements may reduce welfare. That means that international trade may shift from lower cost outsiders to high cost members, because the agreement is in a way that by changing the trade instrument, they need to buy from the member countries. And what if it leads to lower cost, the shift from which they normally buy from low cost outsiders of this regional trade agreement, but because of the regional trade agreement, if they are buying higher cost output, they are importing high cost goods from the member countries, then that means this is a trade diversion, or this is welfare deteriorating proposition. So in order to explain this, consider three countries A, B, and C, and assume that there is a regional trade agreement between A and B. So in this case, A and B, they engage in a trade agreement, and C is the outsider country. So what if there is a trade bloc that this agreement reduces tariffs between countries A and B? So that means A and B maintain tariff with C, but there is no tariff between A and B. So in this case, trade creation means if country A imports more products from B, and that means trade creation. Trade creation means an expansion in world trade resulting from forming an FTA. That means it's a welfare increasing effect. Then on the other hand, there can be welfare reducing situation also can emerge. That means trade diversion. That means part of the increase in trade between A and B is a result of a decrease in trade between A and C. That means here, because of the regional trade agreement, there is an increase in trade in A and B, but that resulting increase in trade is because of there is a decrease in trade between A and C or B and C. That means there is a decline in the trade from the outside country. That is called trade diversion. So that means a shift in the pattern of trade from low cost world producers to higher cost FTA members, and this can often lead to welfare reducing effect. There are several debates on regionalism. Some economists, they argue for they are against regional trade agreements. Some countries they are in favor. Economists like Jagdish Bhagwati, they are in support of regional trade agreements because they say that he is against regional trade agreements because his argument is that it undermines WTO multilateral framework and encourage trade diversion. However, Paul Krugman, he argues that regional trade agreements are required because some the regional trade agreements happen mainly between countries, they are close to each other, and they are sometimes they may be having a natural trading patterns, and it would enhance overall trade. So overall the debate, there is some consensus as well, there is a middle ground. RTS can complement WTO if designed to expand trade and not exclude outsiders. In WTO has certain provisions for regional trade agreements. Mainly, it advises the member countries to follow the core principle of non-discrimination, and exception for the RTS are allowed if they cover substantially all trade among members. So these are the conditions I already mentioned here. So RTA, in short, RTA must not raise barriers to trade with non-members. So in addition, WTO, there is WTO has certain provision for environmental as well. That means it's allow member countries to pursue environmental protection measures if some of the trade practices is going to increase, threaten the climate change. So one example is carbon border adjustment mechanism, a new tool by EU to prevent carbon leakage and ensure fair competition. So this is the figure that showing the number of environmental provisions over time across in different RTAs. I'm just showing you some screenshot. You can have a quick look over it. Let me also, before concluding this, let me also show you a case study about the environmental protection and WTO provisions. It's called Carbon Border Adjustment Mechanism that recently EU proposed 20-35 tariffs on imports on steel, iron, cement under the CBAM framework, and in India, for example, considered as a trade barrier, and this goes against the WTO principle. India plans to challenge CBAM at a WTO, stressing the need for a fair and transition period for developing country. I'm showing you some content, some text about CBAM, the products that is covering coming under the CBAM framework, and a little bit more details, further details about the CBAM goods, and also what the EU asks for the exporters, how the complaints they are asking from the exporters from other countries, non-EU members. So what we have done in this session is that we discussed WTO, and then we also discussed the regional trade agreements. So what we found that both aim to promote trade and development, but RTS can create a trade diversion that challenges the WTO universal framework. So together, WTO and RTS shape complementary but sometimes competing architecture of global trade governance. Thank you for watching this session, and see you in the next session. Thank you.